All right, let's dive into this Northern ARC Capital Ltd's Q3, FY25 performance. And I think, this is going to be a good one. They're doing some really interesting things, I think, in India's financial world.
For sure.
Kind of like we're going behind the scenes here with the Rising Star.
Yeah.
And we got their press release, official filings. We even got the auditor's reports.
Yeah, the whole 9 yards.
All ready to go. So
yeah, we're going to unpack it all. No jargon.
yeah, just the good stuff.
That's right. And what I think makes this even more interesting is that India's lending scene is going through some changes right now.
Right.
So seeing how Northern ARC is handling things, I think is going to be really insightful.
Yeah, for sure. And speaking of handling things well, their press release mentions a 16% year-over-year growth in their assets under management, or AUM for short.
Right.
That's like their total portfolio, right?
Exactly. And that kind of growth, especially when you think about the current challenges in the lending industry, I mean, that could mean good news for your investments.
Right.
Or at least it's something to keep an eye on if you're interested in this sector.
So they're managing to grow their business despite, the headwinds they're facing.
Yeah.
That's pretty impressive. But I think what I found really fascinating is this shift towards direct-to-customer lending. They say 52% of their portfolio is in this segment now.
Okay.
What's the big deal about that?
Well, imagine you're someone who traditionally wouldn't have qualified for a loan from a big bank.
Okay.
Northern ARC is stepping in to provide those financial services to those people, often through digital platforms. And it's a big deal because it reflects this broader trend of financial inclusion in India,
Okay.
where more people are getting access to credit now more than ever before.
So they're tapping into a whole new market then.
Yeah.
They're kind of helping people who might not have had access to these services before.
Right.
That's really cool. Okay, enough about the big picture.
Right.
Let's get our hands dirty with the actual numbers here.
Okay.
Their unaudited results show their profit before tax jumped to over 940 crore rupees
Wow.
for the quarter. And then their net interest income, which basically tells us how much they're making from their lending activities, is up 10% year over year.
Those are definitely healthy numbers.
Yeah.
It suggests that their core lending business is doing really well and they're growing their profitability even as they kind of expand into these other areas like investment management and advisory services.
But hold on, before we get too excited here, their press release also mentions this rise in credit costs. That sounds a little bit like a red flag, doesn't it?
It's definitely something to pay attention to, but remember, no investment is without risk.
Right.
And Northern ARC is upfront about this in their reports. They've got this really disciplined approach to risk management and their provisioning coverage ratio. Think of it like a safety net for potential loan losses.
Okay.
It's pretty solid.
So they're not just throwing money around hoping for the best. They're actually being careful and setting aside funds to cover potential issues.
Exactly.
Okay, that makes me feel a little bit better. Now I'm curious about what's next for Northern ARC.
Okay.
Their MD and CEO talks about navigating market challenges.
Yeah.
What kind of challenges are we talking about here?
Well, the financial landscape in India is pretty dynamic.
Right.
There are always these ongoing changes in regulations for lenders like Northern ARC, and things like inflation and interest rate hikes. They can make things a little bit unpredictable.
Yeah, for sure.
But I think within these challenges, there also lie opportunities as well.
So how is Northern ARC planning to handle all of this?
Their leadership really emphasizes this idea of resilience and agility.
Okay.
This means they're likely focused on strengthening their risk management even further, using technology to become more efficient and finding new areas for growth that align with those changing regulations.
Yeah.
They seem to be taking a very proactive approach to adapting to the market conditions.
Now let's talk about the really inspiring part here.
Okay.
Their commitment to serving communities that are often overlooked by traditional financial institutions.
Right.
Their press release mentions impacting over 115 million lives.
Wow.
That's an incredible number. How are they actually achieving this kind of reach?
Their focus is on providing financial services to those underserved communities,
Okay.
often through that direct-to-customer lending we were talking about earlier.
Right.
A lot of their customers are individuals and small businesses who haven't had access to traditional banking services. They're filling a very important gap in the market.
So they're not just about making a profit, they're actually making a difference in people's lives?
Yeah, exactly.
And it sounds like they're not just focusing on loans, right?
Right.
Their press release mentioned their work in areas like microfinance and affordable housing, too. It's like they're trying to cover all the bases.
That's exactly right. They're not just providing loans. They're offering a whole range of financial solutions that are tailored to the needs of these specific communities.
Okay.
They're supporting small businesses, they're helping women entrepreneurs get started, and even assisting families with achieving homeownership.
Okay, this is where it gets really interesting. Can we talk more about their social impact work and how they make sure that it's not overshadowed by their need to make a profit?
Of course, that's what we'll dive into next. They've got this incredible foundation.
So we were just talking about Northern ARC's foundation, right? They're clearly a company that's trying to do good while also doing well.
Right.
But how do they make sure that those two goals don't clash?
It's a really valid question and one that a lot of companies grapple with,
Yeah.
but Northern Arc seems to have found a pretty good balance.
Okay.
They have this separate entity called the Northern Arc Foundation.
Hmm.
It focuses solely on promoting financial literacy, supporting research in financial inclusion, and even fostering innovation in this space.
So it's like they're putting their money where their mouth is.
Exactly.
It's not just a marketing tactic. They're actually investing and making a difference.
And it's not just about the money that they're putting in.
Right.
They're also leveraging their expertise and their connections
Okay.
to work with NGOs, government agencies, and other organizations to really build a more inclusive financial system in India. It's a very multifaceted approach,
Yeah.
and I think it speaks volumes about their long-term commitment to social impact.
Okay, I have to admit this is all pretty impressive, but let's be honest, we haven't even gotten to the nitty-gritty of their financials yet.
Okay.
I'm ready to kind of put on my investor hat here
All right, let's do it.
and really dig into the numbers.
Okay.
What kind of insights can we get from their debt-to-equity ratio, for example?
That's a great place to start.
Okay.
The debt-to-equity ratio is like a financial health check. It tells us how much debt a company is using to finance its assets.
Okay.
A high ratio can sometimes be a sign of risk, but in Northern Arc's case, their unaudited standalone results show a ratio of 2.53 for this quarter.
Okay.
That's actually a pretty reasonable level considering that they're actively growing and expanding.
So they're using debt strategically but not recklessly.
Yeah, exactly.
That's good to know. What about their capital adequacy ratio? I remember hearing that's another important metric for these financial institutions.
Absolutely. Think of the capital adequacy ratio as a measure of a company's ability to withstand financial shocks.
Okay.
The higher the ratio, the better equipped they are to absorb any potential losses.
Okay.
Northern Arc's capital adequacy ratio stands at 26.1%,
All right.
which is significantly higher than the regulatory requirement of 15% for NBFCs in India.
Okay, so they've got a solid buffer then in case things get bumpy.
Right.
That's reassuring. Now let's talk about the bottom line. What's their net profit margin looking like?
Well, after a quick calculation, we can see their net profit margin for this quarter is 17.37%.
Okay.
This means that for every 100 rupees of revenue they generate, they're keeping about 17 rupees as profit.
Okay.
That's a healthy figure, especially when you consider the current economic climate.
Yeah.
It indicates that they're managing their costs effectively and they're generating a good return on their investments.
Feels like they're running a pretty tight ship.
Yeah.
They also mentioned something called pre-provision operating profit in their press release.
Uh-huh.
To be honest, I'm not exactly sure what that means.
Sure, I can break that down for you.
Okay.
Pre-provision operating profit, or PPOP,
Okay.
is essentially a measure of a financial institution's core earnings before taking potential loan losses into account.
Okay.
So think of it as a snapshot of their operational performance before you factor in any potential bad loans. In Northern Arc's case, their PPOP grew by a solid 9% year over year for this quarter.
So even before considering any potential hiccups with loans, their core business is performing well.
Exactly.
But speaking of loans, let's not shy away from the elephant in the room. How can we assess their asset quality and understand the risk associated with those bad loans we talked about earlier?
That's a really crucial question.
Yeah.
And there are a few key metrics that we can look at. One is the gross NPA ratio, which tells us the percentage of their loans that are considered non-performing.
Okay.
In Northern Arc's case, this ratio is a mere 0.90%.
Right.
Then there's the net NPA ratio, which factors in the provisions they've set aside for those bad loans.
Right.
This one's even lower at 0.37%.
Hmm.
These are remarkably low figures, especially compared to some other players in the industry.
Wow, those are really impressive numbers. It seems like their disciplined approach to risk management is really paying off?
It certainly appears so, but it's important to remember that the lending landscape is constantly evolving.
Right.
And past performance doesn't guarantee future results.
Yeah, for sure.
So it's crucial to keep a close eye on these metrics in the coming quarters
Right.
to see if they can sustain this level of asset quality.
You're absolutely right. It's all about staying vigilant. Now, I was also intrigued by the segment-wise breakdown of their business in their consolidated financial results. Can we dig into that a bit?
Absolutely. That's where we can really see how their diversification strategy is playing out. Remember how we talked about their shift towards direct-to-customer lending? Well, their consolidated segment revenue confirms this trend.
Okay.
Their financing activity, which primarily includes their lending operations, still contributes the majority of their revenue.
Okay.
But their other segments, like investment advisory services and investment management services, are also showing some promising growth.
So they're not putting all their eggs in one basket,
Exactly.
which is always a good sign, right?
Precisely. They're building a more resilient business model by tapping into these multiple revenue streams
Yeah.
and mitigating the risks associated with relying too heavily on any single sector or product.
Right.
This kind of strategic diversification is a smart move in a financial landscape that's always evolving.
Okay, we've covered a lot of ground here.
We have.
And honestly, I'm feeling pretty optimistic about Northern Arc's financial position.
Yeah, me too.
But I can't help but wonder, with all this talk of profit margins and ratios, are we losing sight of their social impact goals? Can they really strike a balance between financial success and making a positive impact on the world?
That's the million-dollar question, isn't it?
Yeah.
And it's one that we should definitely explore further.
For sure. I'm really interested in hearing more about the specifics of their social impact initiatives.
Okay.
How are they actually translating their financial success into tangible change for those underserved communities that we talked about earlier?
Well, let's dive into that next. Their work in this area is truly inspiring,
Yeah.
and it's worth taking the time to understand how they're making a difference.
Okay, so we've gone through their financials, and it seems like Northern Arc has, a pretty solid foundation.
Yeah,
But I guess, numbers only tell part of the story, right?
right.
Let's maybe switch gears a little bit here and talk about, the heart of this company, their commitment to social impact.
Yeah, absolutely. What's really remarkable about Northern Arc, I think, is how they've kind of woven social impact into their, the very fabric of their business model.
Yeah.
It's not just like an add-on or, some PR thing.
Yeah.
It's really fundamental to who they are and how they operate.
They made some pretty bold claims in their press release, like impacting over 115 million lives.
Yeah, it's a huge number.
That's mind-boggling. How are they actually, achieving this kind of reach?
Well, it all comes down to their focus on serving communities that are often overlooked by those traditional financial institutions.
Right.
Think back to our conversation about their direct-to-customer lending.
Yeah.
A big chunk of those customers are individuals and small businesses who really struggle to access those formal financial services. So they're reaching people who might otherwise, fall through the cracks.
So they're filling a really important gap in the market then.
Yeah.
And not just by providing loans, right? Their press release mentioned their work in areas like MSME financing, microfinance, and even affordable housing.
Yeah, definitely.
It seems like they're taking kind of a holistic approach to addressing the financial needs of these communities.
They understand that true financial inclusion goes beyond just, access to credit.
Right.
It's about offering this comprehensive set of financial solutions that are really tailored to the specific needs of those different communities. They're empowering small businesses to grow, they're supporting women entrepreneurs in starting their ventures, and they're even helping families achieve homeownership.
It's pretty inspiring to see how they're making such a tangible difference in the lives of so many people.
It is.
But how do they make sure that, these social impact goals don't get overshadowed by their drive for profit? How do they kind of, strike that balance?
I think that's a question that every socially conscious company has to kind of wrestle with.
Yeah, for sure.
But it seems like Northern Arc has figured out a way to walk that tightrope.
Okay.
They've gone beyond just saying good intentions.
Right.
They've actually taken concrete steps to demonstrate their commitment.
Okay.
Remember the Northern Arc Foundation?
Yeah.
That's a true testament to their dedication.
Right.
This foundation is actively involved in promoting financial literacy. They're fostering innovation in financial services, and they're supporting research in, the field of financial inclusion.
So they're not just talking the talk, they're really walking the walk.
Exactly.
They're investing in building, I guess, a more inclusive financial system, not just for their customers, but for, the whole community.
Yeah, for the greater good.
It's really impressive to see a company that's so dedicated to both financial success and, I guess, social responsibility.
For sure.
They're proving that it is possible to do well while doing good, and that's a pretty powerful message.
It really is. Northern Arc is setting a high bar for others in the industry, demonstrating that profit and purpose can really go hand in hand.
So where do we go from here? What does the future hold for Northern Arc?
Well, I think they've really firmly established themselves as a leader in the Indian financial inclusion space. With their recent IPO and their ambitious growth plans,
Right.
they really have the resources and the momentum to scale their impact even further. I wouldn't be surprised to see them continue to innovate, expand their reach into these new communities,
Right.
and deepen their engagement with, their existing customers.
It sounds like they're poised to make an even bigger difference in the lives of, millions of people.
Sure.
And that's a story worth following, right?
Absolutely. Northern Arc's journey is a testament to that power of combining financial expertise with this really deep commitment to social impact.
Mm.
They're showing the world that a company can thrive and make the world a better place, and that's something I think we can all get behind.
Well, there you have it. We took a deep dive into Northern Arc Capital Ltd's Q3 FY25 results, explored their financial performance, and kind of, uncovered their pretty inspiring social impact story.
Yeah.
They're a company to watch, a company to learn from, and I think a company to be optimistic about.
And here's a final thought to ponder. As Northern Arc keeps growing, could they become like a model for a more ethical and inclusive financial system, inspiring other companies to kind of embrace this more purpose-driven approach? What do you think?
That's a great question for everyone to think about. It's 60-60.